The 2008 crash wiped out 40% of retail portfolios in 3 weeks. Every newsroom treated the drop like a total dead end. Yet veteran investors read that exact panic as a necessary reset. When your entire strategy freezes, it rarely means you are broken. So why does real growth begin right after an apparent ruin? In 2017, an old commercial parcel in downtown Mumbai sold for redevelopment. The new owner brought heavy excavators before ordering any concrete. You cannot pour new foundations on top of rotted framework. Tearing down the old masonry feels destructive while it happens. Yet every builder knows clearing space is the actual first step. That demolition happened because old structures cannot hold larger weight. Outdated routines crack under expanded financial commitments. Because unworkable habits collapsed, room opened for solid systems. Painful friction clears the path when scaling demands stronger roots. The discomfort proves your operating boundary is finally widening. During an OS patch, a phone becomes completely unresponsive for 10 minutes. Tapping the screen brings no reaction from any menu. A casual observer might assume the hardware has completely died. Beneath that idle display, millions of code lines are rewriting themselves. What looks like a total freeze is actually internal reconstruction. Industrial engineers distinguish routine maintenance lag from engine failure. Temporary latency occurs while newly added modules synchronize properly. When your earnings stall during a transition, remember that logic. Your capacity is reorganizing itself to handle greater output later. Ancient courts understood this rhythmic shift through an iconic tale. An old Persian fable describes a monarch seeking steady balance. His court crafter engraved a plain gold band with 4 words. The inscription simply stated that this season too will pass. It curbed wild arrogance during peak triumph and lifted dark despair. That single reminder completely rewrote how leaders viewed volatility. Ratan Tata often noted that business cycles test patience above all. Market downturns do not define an enterprise as a permanent failure. Accepting change keeps short-term paper losses from breaking your identity. Capital shifts continuously across sectors through every generation. Those who withstand the fluctuation earn an invaluable asset next. No classroom textbook can teach the real psychological weight of a drawdown. Absorbing real operational turbulence builds authentic risk calibration. Every costly mistake teaches capital preservation far better than theory. If you have insights or strategies beyond this video, please like, subscribe, and share in the comments below. The most durable traders treat operational scars as essential tuition. Naval captains face 40-knot gales by turning directly into oncoming swells. Dropping heavy anchors and holding position consumes immense engine power. To an outside observer on shore, the vessel appears dead still. Maintaining that stationary heading requires deliberate, active seamanship. Surviving the surge without capsizing is a tactical triumph in itself. In 2020, merchant fleets conserved cash reserves across global shipping lanes. Protecting baseline liquidity kept operations ready for the subsequent boom. Enduring flat quarters without surrendering principal builds compounded resilience. Progress is not measured solely by aggressive linear velocity forward. Yet another hidden physical dynamic governs every eventual breakthrough. Water heats steadily at 99 degrees without any visible boiling. Because thermal energy accumulates invisibly, surface stillness fools people. Adding just 1 single degree produces explosive steam instantly. Because of that final threshold, years of preparation suddenly manifest. The greatest danger arrives just before that final degree turns. A 19th century gold prospector spent years excavating deep granite veins. Exhausted by rising debt, he sold his machinery for salvage. The incoming buyer hired an engineer and drilled 1 meter ahead. A multi-million-dollar deposit sat directly behind that remaining rock layer. The original owner quit at the precise threshold of discovery. Cyclical bear markets bottom out exactly when retail capitulation peaks. When the emotional desire to abandon positions feels overwhelming, pause. Market exhaustion often mirrors the point of maximum investor despair. Selling at the cyclical trough locks in an otherwise temporary paper loss. Strategic thinkers convert this exact friction into unexpected leverage. Mukesh Ambani faced aggressive tariff barriers when expanding industrial capacity. Reliance engineered tighter operational efficiencies to bypass those external constraints. Severe economic friction forced the development of superior technical moat. Adversity provided the blueprint for dominant long-term competitive scaling. Overcoming institutional barriers is rarely done in total isolation. In 1999, Bangalore tech founders formed informal study collectives weekly. Exchanging battle-tested notes reduced individual turnaround times dramatically. Mentorship shortens the painful learning curve of market cycles. Discussing setbacks openly removes the paralyzing shame of sudden downturns. A shared mental framework transforms individual fragility into shared strength. Quantitative algorithms execute trade mechanics in less than 5 milliseconds. Yet human conviction decides whether the firm sticks to the system. Technical mastery fails if emotional panic forces an undisciplined liquidation. Psychological composure dictates long-term survival far more than charts. That internal stability reveals the real blueprint behind every collapse. Master architects do not dismantle structures out of spite or anger. They operate with precise schematics for an upgraded commercial complex. Every falling wall serves the ultimate purpose of the new blueprint. When your current setup shatters, focus on what is being drafted. The loss simply prepares the footprint for far greater scale. Traditional gold merchants insert balance inventory by liquidating slow stock. Emptying locked vault space allows higher margin bullion purchases next season. Releasing past investments creates immediate operational room for growth. You cannot accept multi-crore opportunities with an overcrowded portfolio. Clearing space is the deliberate precursor to holding true wealth. A 30-year market study shows survival outcompetes aggressive timing. Staying solvent through volatile down cycles drives generational wealth. What it really came down to was surviving the quiet resets. That's why enduring periods of system lag still matters so much. Holding your ground transforms severe crises into strategic upgrades. Every major market collapse rewrote the boundaries of what came next. Personal hardship acts as a demanding architect rebuilding your scale. The painful demolition is simply clearing ground for wider horizons. Your system has not failed. It is running a necessary update. The story doesn't end here. The next chapter has already started.